Since the outbreak of the Russia-Ukraine war, Western countries have imposed a series of sanctions on Russia. Among them, the harshest move was kicking Russia out of the SWIFT system. As a result, overnight, Russia was almost unable to conduct international settlements through the US dollar. With no other choice, Russia had to look for alternatives. For example, it began using Indian rupees to settle oil trade with India, while transactions with China were conducted directly in renminbi. But recently, Russia suddenly announced that it would completely reject rupee settlements, and that from now on, if India wants to continue buying Russian oil, it can only pay in renminbi. This is not good news for India, because once it switches to renminbi settlement, its cost will definitely increase. So here comes the question: why did Russia suddenly become unwilling to accept rupees? And what benefits does settling in renminbi bring to Russia? If you like our video content, please click to subscribe to my YouTube channel so that you can receive all our latest video content. Now, let's get into today's topic. Since the last century, the international community has already established a dollar-centered monetary system. From that time on, the US dollar officially took the position of the world's #1 currency. Later, the United States introduced the petrodollar system, further consolidating the dominance of the dollar. At present, there are about 14 sovereign countries and 5 territories around the world that directly use the US dollar as their legal currency. In addition, more than 50 countries, although they have not officially adopted the dollar, still see it widely circulating in their markets. So far, among more than 190 countries worldwide, the US dollar is commonly used in fields such as trade and finance, and in the foreign exchange reserves of various countries. The proportion of the dollar has always remained around 60%. Of course, another key reason why the US dollar can be almost everywhere in global trade is the SWIFT system. It is almost the lifeline of international settlements, and this system has long been led and controlled by the United States. In other words, as long as international trade is involved, it is almost impossible to avoid the US dollar. But the problem is, if the SWIFT system is interrupted or used by the United States as a geopolitical tool, then even if a country has money in its account, it will still be unable to buy anything because settlements cannot be completed. Over the past few decades, many countries have also been deeply affected by the US dollar system, and the most typical example is Iran. As early as 2012, the United States demanded that SWIFT cut off connections between Iran's central bank and several major banks. This directly caused Iran's crude oil exports to drop sharply from an average of 2.5 million barrels per day in 2011 to 1.45 million barrels per day in 2013, with oil revenues shrinking by more than 40%. Rapid currency depreciation and soaring inflation plunged Iran's economy into difficulty. At that time, the Iranian rial depreciated by 146% against the US dollar, and the inflation rate surged to 42.2%. Even worse, after the United States unilaterally withdrew from the Iran nuclear deal in 2018, it directly ordered SWIFT to stop providing services for Iran's central bank and 50 banks, including key institutions responsible for oil export settlements. As a result, Iran's crude oil exports plummeted to less than 500,000 barrels per day in 2019, and its GDP shrank by 6.8%. In order to maintain its exports, Iran had to rely on a gray fleet to secretly transport oil and began trying to settle transactions using renminbi, gold, and cryptocurrencies. But Iran was not the only country affected by SWIFT. As one of the world's major energy exporters, Russia also could not avoid the risks brought by the US dollar system. After the outbreak of the Russia-Ukraine conflict in 2022, the United States and its allies announced that 7 major Russian banks would be excluded from the SWIFT system and froze about $300 billion in foreign exchange reserves. At the same time, Western countries also impose an embargo on Russian seaborne crude oil, further cutting off its trade channels. In this situation, Russia had no choice but to look for alternatives. It deployed more than 600 aging oil tankers to bypass the sanctions and promoted ruble settlements to maintain exports. Although by 2023 Russia's crude oil export volume had only decreased by about 3% compared with 2021, its revenue dropped by nearly 30%. The impact of Western sanctions on Russia through the SWIFT system is obvious. To break free from the US dollar payment system, the renminbi and the rupee became settlement currencies for Russia's oil exports. After all, the renminbi's exchange rate is relatively stable, backed by a vast trade network and an increasingly sophisticated cross-border payment system, making it more reliable and efficient in international settlements. More importantly, the renminbi and the ruble can be directly exchanged without going through the US dollar as an intermediary, which can save Russia about 2% to 3% in exchange costs. Therefore, Russia gradually came to regard the renminbi as a more stable and strategically significant option. However, on October 7th of this year, Russia suddenly issued a warning to India. From now on, all oil transactions with India must be paid for in renminbi. It should be noted that India has always been one of Russia's largest energy buyers. So why did Russia choose this time to refuse to accept rupees? We all know that since the outbreak of the Russia-Ukraine conflict, Western sanctions have forced Russia to sell oil at lower prices, while India has taken the opportunity to greatly increase its imports. From an average of 1.02 million barrels per day in 2022, it has risen all the way to 1.8 million barrels per day in 2025, with an annual import value of about 45 billion US dollars, accounting for 35% of India's total oil imports. Such a growth rate is extremely rare in the history of global energy trade and has allowed Russia to surpass Iraq in a short time, becoming India's largest oil supplier. However, as trading volumes surged, settlement problems also began to surface. At the beginning, India still tried to make payments in US dollars or UAE dirhams. But in 2025, the United States threatened India with tariffs, saying it would impose a 25% import tax on Indian goods. This forced India to switch to rupee settlements. By the first half of 2025, the balance of Indian rupees held by Russia had exceeded 4.5 trillion rupees, or about 54 billion US dollars, equivalent to 7% of India's annual foreign exchange reserves. The problem is that the rupee is not an international currency. These funds can only stay in Indian bank accounts. They cannot be freely converted into US dollars or euros, nor can they be used to purchase goods outside of India. Even worse, in 2025, the rupee's exchange rate against the US dollar fell by more than 15%, causing Russia's rupee assets to shrink by about 8 billion US dollars. At the same time, the Reserve Bank of India has strict restrictions on the outflow of rupee funds. Even if Russian companies want to invest in Indian government bonds or infrastructure projects, they must go through complicated approval procedures, making actual operations extremely difficult. Under such circumstances, Russia can only stop using rupees for settlement. But why is Russia willing to accept renminbi settlements for oil? We should know that Russia's energy export destinations are not limited to India. It also supplies crude oil to many third-party countries such as Venezuela, Myanmar, and Brazil. For these countries that hope to reduce their dependence on the US dollar, the renminbi is clearly the most practical and feasible alternative. Take Myanmar as an example. The renminbi already has a certain circulation base within its territory. Venezuela and Brazil have long signed large-scale currency swap agreements with China. After using the renminbi for settlement, these countries can not only expand trade with China, but also reduce the foreign exchange risks brought by fluctuations in the US dollar to a certain extent. More strategically, Russia still needs to import a large number of industrial products, including chips, engines, automobiles and gas turbines. All key equipment that India is unable to provide, but China has full production capacity. Moreover, as the world's largest industrial manufacturing country and the only country with a complete industrial system, China can almost meet all of Russia's needs under the sanctions environment. Therefore, as long as Russia holds renminbi, it can maintain its lifeline in international trade. But the question is, as an important oil buyer, will India compromise with Russia on the settlement issue? In fact, India has always hoped to enhance the international status of its own currency and make the rupee more liquid in the global market. But the reality is not ideal. Due to the large fluctuations in the rupee's exchange rate, coupled with high inflation and long-term fiscal deficits, the outside world lacks sufficient confidence in India's monetary system. Although India has established rupee settlement mechanisms with about 20 countries, the actual scope of use is still limited, mainly concentrated among neighboring South Asian countries. More importantly, India's high dependence on energy imports has also objectively limited the space for promoting the rupee in international trade. At the same time, India has also tried to use the BRICS platform to promote a so-called multi-currency settlement mechanism and hopes to include the rupee in it. But due to differences in interests among member countries and the low level of cooperation with India's demands, progress has been relatively slow. For example, in the new development bank established by the BRICS countries, loans denominated in rupees account for only 8%, while those denominated in renminbi reach as high as 62%. Therefore, with Russia now requiring oil settlements in renminbi, Indian oil importers can almost only choose to compromise. After all, the crude oil supply by Russia is still more than 30% cheaper than international market prices. According to a long-term agreement signed in November 2025, Russia agreed to supply crude oil to India at a price $3 lower per barrel than the benchmark price. This price advantage allows India to save about $17 billion in foreign exchange expenditures every year. Even more attractive is that India, through the model of low-cost import and resale after refining, processes the crude oil purchased from Russia into diesel and gasoline, and then exports them to Europe at 90% of the market price. The net profit per ton of product is about $380, and this model brings India about $16 billion in additional annual income. Therefore, although India still verbally emphasizes the importance of rupee settlements, in actual practice, it has had to gradually accept the renminbi. So far, Indian Oil Corporation, the largest state-owned oil company in India, has already completed 2 to 3 batches of payments for Russian crude oil in renminbi, with a total transaction volume of more than 2 million barrels. Each batch of transactions amounts to about $300 to $500 million. Using a model of US dollar pricing, renminbi payment, at the same time, Hindustan Petroleum and Bharat Petroleum have also begun to show their willingness to shift toward renminbi settlements. At present, the two companies have respectively applied to the Reserve Bank of India for cross-border settlement quotas of 5 billion renminbi and 3 billion renminbi, paving the way for future renminbi payments. In recent years, the global trend of de-dollarization has obviously accelerated, and the scope of the renminbi's use in international trade and settlement has also been steadily expanding. In October 2023, the Prime Minister of Pakistan signed an important agreement with the Chinese side, deciding to completely replace the US dollar with the renminbi for settlement in the China-Pakistan Economic Corridor construction projects and in bilateral trade. In order to promote the implementation of this cooperation, China also specially opened the authority for issuing renminbi letters of credit. At the same time, some major African economies have also begun to embrace the renminbi early on. For example, Zimbabwe and Angola have not only included the renminbi in their official foreign exchange reserves, but have even directly listed it as one of their legal currencies, allowing it to circulate freely in their domestic markets. In November 2022, the China-Africa Cross-Border Renminbi Settlement Center was officially inaugurated. This settlement mechanism allows small currencies that originally had a low frequency of use in international trade to be smoothly connected with the renminbi, which has further consolidated the renminbi's status as a global settlement currency. To not miss out on our future projects and news updates, please make sure you subscribe to our channel and turn on notifications. We will continue to provide you with more exciting and interesting content.